Good morning, everyone. I'm David Paul. I'm the Managing Director of VectorVest in the UK. And today I want to look at the US market and three shares that I believe should prosper over the next few days. The first slide that I've got is the VectorVest composite of the USA. Now, this is, to my best knowledge, the broadest measure of the American market that I know of. It's all 8,000 plus shares that we follow on the US bourses. That's a candle plot. On that, you should be able to see the red and the green triangles. Those are our medium-term market timing system. On VectorVest, it's known as the DEW. It's an objective method of telling us when it's safe to be in the market and when it's not safe to be in the market. Now, the last signal from this medium-term market timing model said it was safe to buy into stocks since the 6th of April. And that's what I've been doing. Now, the green line study in the window below the price is the buy-sell ratio. Every day we put all of the shares that are a buy recommendation, all of the shares that are on a sell recommendation into this ratio, which represents the breadth of the advance. And although the trend of the market is up and it looks as if it's breaking above the June 9th highs, you can see that the breadth of the market is not keeping up. And that's a worry, okay? We've got a market that's rising on falling breadth, and that's always a concern. Nevertheless, the trend is up, and I'm holding positions and adding to positions, and I'll show you some of those positions in a second. So that's the SPX, folks, and after a few very low volatility days, Wednesday, Thursday, Friday last week. Yesterday, it did its best to break up, and it's pushing up, as I say, on that June the 9th high. So I think that with the earnings behind us this week, the big tech earnings, then this should push. And the next target, I think, that I've worked out based on a Fibonacci projection is about 33.16. That's my next objective on the S&P 500. So there was a move out of tech in the last 10 days or so, but that seems to have reversed yesterday, and the NASDAQ, as you're all probably aware, made a new high. What am I looking at? Well, I'm looking at three different sectors of the economy, and rather tongue-in-cheek, the first sector is yoga pants, because this is Lulu. It's been a great provider for me and for those people in the UK that listen to me. The Lulu pulled back in what a trader of yesteryear would have called a Wyckoff spring. And it pulled back and is now pushing up strongly. It actually gapped out of the support level, and it's pushing on the old highs. And I think that Lulu looks as if it wants to go much higher over the next few days. I'm holding it. I've been holding it for a very long time, and I've added to the position a couple of times. The second share is a share that has been frustrating. There's no doubt about that. AMD. We forecast that AMD will in fact grow earnings next year at 33%. It's got a very strong, safe track record of making money. Earnings, that's the earnings per share plot in the window below the price. And it's charted what I felt was this cup and handle pattern. And I thought it was going to break a couple of times, and I'm hoping over the next day or two that this is going to break. When this does break, folks, then I think that there's a significant move in this particular share. So again, like all the tech stocks, will be reporting in the next day or two. That looks certainly worth your consideration. I'm holding that position now for the last couple of weeks. And then the last one is clearly first stock, yoga pants, second stock from tech, and the third stock is a builder. And builders have had a really good run over the last couple of days, and they're our highest sector in the market over the last couple of weeks. So DHI is my pick. It's just broken out of that cup and handle pattern. It looks to me as if it can go much higher towards our valuation figure of about $80. So market looks positive, but there is a headwind in the breadth of the market, and three shares that I think should do well if the upward trajectory of the market continues. Thanks very much indeed.